Could the future of gold prices be on a steady climb? And what does this mean for the concept of de-dollarization? Are we on the brink of a major shift in the global financial landscape? Gold, a symbol of wealth and financial stability, has been a safe haven for investors for centuries. As we stand at the crossroads of 2023, several catalysts could potentially drive the price of this precious metal even higher. One of these catalysts is de-dollarization, a concept that challenges the dominance of the US dollar as the world's reserve currency. With the rise of a multipolar world, more commodities could be settled in non-dollar currencies, potentially leading to an increase in gold prices. Moreover, the traditional financial sector is experiencing a tremor. Confidence in the US banking industry is dwindling, with capital being withdrawn from banks and invested elsewhere. If this liquidity crisis escalates, the Federal Reserve may resort to quantitative easing, which could in turn drive up the price of gold. Lastly, the geopolitical landscape is not as stable as it once was. The diplomacy between the US and its allies and Russia and China is becoming more strained. In times of such uncertainty, investors often turn to gold as a safe haven. However, it's not all smooth sailing. There are critics who argue that the idea of a common currency for the BRICS nations backed by gold is impractical. They argue that using gold reserves to back the currency would mean it tracks the price of gold rather than the individual currencies of the BRICS nations. So, we find ourselves in a world of uncertainty where gold prices may rise, and the concept of de-dollarization could potentially alter the global financial landscape. Stay tuned as we delve into expert opinions and predictions on these hot-button issues. Gold prices are predicted to experience a significant increase in 2023, but what are the catalysts driving this surge? The first catalyst fueling this upswing is de-dollarization. The US dollar's dominance as the world's reserve currency is being challenged by the rise of a multipolar world. As more commodities are settled in non-dollar currencies, this could lead to an increase in gold prices. The second catalyst is the instability in the traditional financial sector. The US banking industry has been experiencing failures and a decrease in depositor confidence. This has prompted a significant amount of capital to be withdrawn from banks and invested in money market funds. If this liquidity crisis worsens, the Federal Reserve may have to implement quantitative easing, which could drive up the price of gold. The final catalyst is the deteriorating diplomacy between the US and its allies and Russia and China. This could lead to increased geopolitical risk and uncertainty. In times of such risk, investors often turn to gold as a safe haven. Experts predict that these factors combined will drive up gold prices significantly. De-dollarization, instability in the traditional financial sector, and worsening geopolitical relationships are all likely to contribute to a surge in gold prices. Gold, traditionally seen as a safe haven during uncertain times, is expected to become even more valuable as these catalysts continue to shape the global economy. As investor confidence in traditional banking systems wanes and geopolitical tensions rise, it's predicted that more and more investors will turn to gold. However, it's important to remember that these are just predictions, and the actual impact of these catalysts could be different. Economic conditions are unpredictable and can be influenced by a variety of factors. But as gold prices rise, where does this leave the US dollar? As de-dollarization continues to gain momentum and the traditional financial sector faces instability, the value of the US dollar could be significantly impacted. But that's a topic for another scene. Stay tuned as we delve deeper into the future of gold prices and the US dollar. The dominance of the US dollar as the world's reserve currency is being challenged. What is de-dollarization and how is it reshaping the global financial landscape? Let's delve into this. De-dollarization, in simple terms, is the process of shifting away from the US dollar in international trade and financial systems. This could be due to a variety of reasons, from geopolitical tensions to economic strategies, or even the rise of emerging markets. Now let's talk about the global financial landscape. We're witnessing the rise of a multipolar world, where power and influence are distributed among various countries instead of being centered around one superpower. This shift is challenging the US dollar's dominance. Countries are now settling more commodities in non-dollar currencies, seeking to reduce their dependence on the US dollar. But why does this matter? Well, this shift towards de-dollarization could potentially lead to an increase in gold prices. Gold has traditionally been viewed as a safe haven in times of economic and geopolitical uncertainty. As countries move away from the US dollar, they may increase their reliance on gold, driving up its price. But de-dollarization isn't just about gold prices, it's about the reshaping of the world's financial systems, the shift in power dynamics, and how countries interact with each other economically. It's about a world where no single currency or country holds all the cards. And yet, it's not all smooth sailing. The transition from a unipolar to a multipolar world is fraught with challenges and uncertainties. It's a complex process that requires careful navigation, and it's still a matter of debate whether it will lead to a more balanced and stable global economy. But not everyone agrees that de-dollarization is the way forward. Let's hear what the skeptics have to say. Market guru David Wu has spoken out against the idea of a common currency for the BRICS nations backed by gold. But why does he believe this idea makes no sense whatsoever? David Wu's arguments against a gold-backed BRICS currency are grounded in some practical considerations. He argues that using gold reserves to back the currency would create a situation where the new currency tracks the price of gold rather than the individual currencies of the BRICS nations. This, in essence, could lead to an economic conundrum where the value of the currency is dictated by the fluctuations of a single commodity on global markets. Additionally, Wu points out that allocating more gold to the new currency would inadvertently weaken China's own currency, the renminbi. This is a significant argument considering China's economic clout within the BRICS Association and its global economic standing. A weakened renminbi could have far-reaching implications not just for China but for the global economy. Another aspect that Wu highlights is the symbolic nature of a gold-backed currency. While it might sound appealing on the surface, creating a gold-backed currency could be seen as a symbolic gesture rather than a practical solution. It's crucial to remember that the primary objective of the BRICS nations is to reduce their reliance on the US dollar in international trade and investments. However, a gold-backed currency may not necessarily achieve this goal in a practical sense. While the broader de-dollarization movement has struggled to gain momentum, the idea of a gold-backed BRICS currency continues to spark debate. There are those who see this as a viable way forward, while others, like David Wu, question its practicality. Whether you agree with the skeptics or the proponents, one thing is clear. The future of gold prices and de-dollarization is a complex and fascinating topic. So, what have we learned about the future of gold prices and the concept of de-dollarization? Firstly, we've discussed the factors that are predicted to drive a strong increase in gold prices in the coming years. The shifting dominance of the US dollar, a key component of the de-dollarization process, is anticipated to contribute significantly to this rise. As more commodities are settled in non-dollar currencies, gold stands to gain value. We've also touched on the instability in the traditional financial sector. The US banking industry is experiencing a decrease in depositor confidence, resulting in substantial capital being withdrawn from banks and invested into money market funds. If this liquidity crisis continues to deteriorate, the Federal Reserve may turn to quantitative easing, a move which could further escalate the price of gold. Another catalyst we've discussed is the increasing geopolitical risk and uncertainty, particularly between the US and its allies, and Russia and China. In such times, gold often emerges as a safe haven for investors. Moving on to the concept of de-dollarization, we've looked at the idea of a gold-backed common currency for the BRICS nations. Despite the symbolic appeal, market experts have pointed out the practical complications. For instance, using gold reserves to back the currency could result in it tracking the price of gold rather than the individual currencies of the BRICS nations. Moreover, it could potentially weaken China's own currency, the renminbi. In conclusion, while the broader de-dollarization movement has struggled to gain momentum, the potential implications for gold prices are significant. The interplay between these factors and their impact on the global financial landscape is a narrative well worth following. As we look to the future, these are the trends to watch. The world of finance never stands still, and neither should we.